2026. The UK property market will never be the same again. New laws, rising taxes, and massive fines. Are UK landlords really heading for bankruptcy? Today, we reveal the truth, no hype. Pressure on buy-to-let investors in the UK has already increased. Interest rates have gone up. Mortgage costs have doubled. And now, in 2026, more regulations are coming. The government is tightening energy efficiency rules. If your property doesn't meet the required EPC standard, you'll have to spend thousands of pounds on upgrades. Otherwise, you could face fines, tax relief limits, higher borrowing costs, tenant protection laws. All of this is eating into landlords' profit margins. Small landlords will be hit the hardest. Those who own just one or two properties. Surviving may become difficult. Some will sell their properties. Some will raise rents. And some will leave the market entirely. But what will smart investors do? Conduct strong cash flow analysis. Invest in energy-efficient upgrades. Use a limited company structure. Opt for long-term fixed mortgages. There's always opportunity in a crisis. But only for those who understand the numbers. 2026 could bring disaster. But it could also bring opportunity. It all depends on whether you're prepared. If you want real updates on the property market and finance, subscribe to the channel. Because in the next video, we'll reveal, is buy-to-let still worth it?